going to say, Bill, you seem a little bit unenthused by the currency discussion here, and it does appear as if your focus is on the data here tomorrow. Are you expecting something significant, a big move in reaction to? I mean, I've heard this one kind of downplayed, just that we should see things kind of in line with what the trend has been, inflationary pressures easing.
Yeah, I wouldn't be surprised to see maybe ease a little more than people are expecting. I think that I'm really watching the Treasury market very closely, and what we've seen coming out of the last 2 weeks was heavy selling, and I think we could be building for some capitulation here in the Treasury market. And really, what we've seen first off from a fundamental standpoint is a deluge of issuance on the bill side, which less than a year, just tremendous. I think it was $700–800 billion over the past couple of weeks. Now, what they're going to start to issue is the sort of the notes in the longer end of the curve over the coming weeks. And I think we're getting some really heavy selling to start this quarter. Started last week, and that drove yields higher. Now, obviously, there's been some inflation tailwinds and things that were driving it. The economy was a bit better than people were expecting. So you had that twofold tailwind as preparing for the issuance, more supply, and then stronger data. So I think we're seeing that just heavy selling has already came into the market. And if we start to see that inflation from CPI dissipate more than expected, I think we have a capitulation of the bond market on our hands. Now, capitulation, is really defined by volume. And when we're talking about such a large, broad macro landscape move here that could be on our hands, it doesn't happen over one day or really 1 week. It's really over multiple sessions, maybe 2 weeks, 3 weeks. This could be a capitulation that started last week, that could finish out this week, and may even drag out through a bit more here this month. But I'm really curious to see where the bond market, maybe not even less the bond market, but the 5-year, the 2-year, the 5-year, the 10-year, where they finish this month. Okay. What type of monthly candle we get here, and that's going to be huge, I think, for the macro landscape. That
capitulation potentially here, if we could take a look at the charts here, this is the first sign of it, I guess, a bit of a rejection of that retest of the March levels. I've got the bonds on the left, I've got the 10-year on the right, the shorter data that coincides with data as well. One could argue, Bill, the technicals, volume you mentioned, and there has been an onslaught of supply here. 38 billion in 1-year bills headed our way for auction today. 50 billion in the 42-day, the cash management bill. That's they're also going to sell 40 billion in 3-year notes. It looks like tomorrow they're going to sell the 4-week bills, 32 billion in 10-year notes. I mean, the list goes on. Thursday, 4 and 8-week bills. 18 billion in sale 30-year bonds. I mean, I'm glad you brought that to our attention. As I look here, there is a significant amount of supply hitting the market here, and that could explain that recent opening up of the door to the downside. But you can see here again how it did hold at the March highs. But to your point here, should we be watching the shorter end right now more closely than the longer? Obviously, giving us a bit more of a feel in terms of what to expect from the Fed.
Yeah, I think we could see the curve steepen, and but I'm not necessarily playing a steepener. There's times where I play a steepener. I'm definitely a speculator on things, and but I want to manage my risk. I've looked at what a position here in our CTA, as well as working with clients and things I'm looking at. I've got calls in the 5-year, got some call spreads in the 10-year going out to September, and seeing. I think this move just kind of building into what we had Friday, adding into the position yesterday, and I think what we'll see from CPI tomorrow, if it really starts to cool, it'll continue to move the committee towards Bostic's message, and when we probably will still get a hike in July, but it could be more of a dovish hike actually, rather than where we saw a no hike. But a hawkish rhetoric in June. So that could really kind of close out the month. And that's why I think it's going to be so crucial here. You get this issuance over the next coming weeks. Remember that now this issuance really started when the debt ceiling was figured out in the early part of June. So they went with the shorter end first, and now they're hitting the longer end, the notes and the bills here over the coming weeks.
A dovish